how should we view the response that we're seeing to Broadcom? I mean, they did beat on earnings, and they actually raised their AI revenue guidance. Generally, we were kind of thinking that this stock was going to trade on its AI outlook and revenues. Why are we seeing it fall so much?
Yeah, that's because the guidance, which usually these stocks react much more to the guidance as opposed to what they report in the trailing 90 days. And this is kind of what.
But Jordan, really quick, the AI revenue guidance is higher. So if you're saying it's about the guidance, when they move higher by another $1 billion, why aren't people responding positively?
Well, that's a function of what the investor base expects and what they get. So you saw this with NVIDIA. I mean, NVIDIA also raised above the consensus, right, by a couple billion, and it still went down 6% the day after, and it's still down every day almost since they reported. And that's kind of like Broadcom. People already expected the CEO to raise from 11 to 12, and that's good. But the overall revenue guidance of 14 billion slightly missed. Right. So in semis, especially if you're probably the second most owned name in the sector behind NVIDIA, you can't miss the top line, even though you raise your AI number. And that's going to be the question people have. The other thing I'd say is that similar to NVIDIA, the expectations for the earnings, peak earnings coming up maybe in the next year or two did not really go up after this report. And valuations are kind of high right now. So that's the other issue, is that you need earnings to be surprising to the upside. And they really have yet to do that for these last few reports.
Okay, so you mentioned NVIDIA, and a lot of people are seeing a lot of similarities to the setup with NVIDIA, is that expectations were so high that everything just had to be perfect. Goldman Sachs actually out with a note yesterday. I want to bounce off of you. The note is titled AI to buy or not to buy. That is a question, going a little bit Shakespearean there. So they go on to say, in our view, the technology sector is not in a bubble and is likely to continue to dominate returns. However, concentration risks are high, and investors should look to diversify exposure to improve risk-adjusted returns while also gaining access to potential winners in smaller tech companies and other parts of the market. Is that possibly what we're seeing here with Broadcom, is that people just want to diversify their bets, as opposed, as you mentioned, this is a big holding in the SMH. It's it has a lot of weight, and also in other ETFs.
100%. I think that unfortunately sentiment and psychology in tech and semis has shifted over the last, call it 6 weeks, from give me, more semis, more concentration, more AI, to the opposite. Give me a reason to sell some of these winners and move these assets into other areas. Now, that could be other areas of tech. I particularly think software and maybe some parts of internet are going to benefit, but it could also be just other areas of the market, particularly those that are beneficiaries of the Fed lowering interest rates. And I think you kind of saw that yesterday, and you've seen that a little bit more this week.
So I want to ask you about just the broader AI trade. There was something in this Broadcom report that I thought was really interesting, and you don't really often hear companies talking about it. So the company just came out and said they don't have any direct participation in NVIDIA's Blackwell product cycle, but they're open to collaboration on optical components and some other things. But at the same time, they raised their AI revenue. Shouldn't that be a bullish sign for the whole idea of the AI trade, is that they have nothing to do with NVIDIA, but they're still able to raise their AI revenue?
Well, that's why I and a lot of people on Wall Street love Broadcom as a complement to owning NVIDIA, right? You can't really win owning just one single AI name like NVIDIA. You need to own a basket of companies that are going to succeed, because all this 250 plus billion of hyperscale cloud spending is not going purely to NVIDIA. It's being spread around. And more so, I think, going forward, it's going to be spread to areas that are in Broadcom's wheelhouse. That's optical connectivity, networking, and these custom ASIC chips that are going to be built by these cloud companies to do inferencing. And that's where they're going to win, and that's why they raised that target for AI revenue.
So, Jordan, just bottom line is this a buy-the-dip opportunity on Broadcom? Is it a buy-the-dip opportunity on NVIDIA and some of these other chip stocks that are under pressure today?
Well, I'll answer that in kind of 2 ways, yes and no. Yes, if you are looking out a year. No, if you're looking for what stocks are going to outperform in like the very short term. Personally, I was worried about this. I wrote about it in my daily email that if Broadcom was not enough and you saw the stock pull back, it was going to put downward pressure and an urgency for more people to move out of semis. And I think that's going to happen today.